This content is for informational and educational purposes only and should not be considered financial advice. All opinions expressed are based on market analysis and current conditions. Investors should conduct their own research and make decisions based on their financial situation and future expectations. The U.S. stock market is currently being driven by geopolitical developments, particularly the ongoing conflict involving Iran and its impact on oil prices. Oil markets have experienced significant volatility, with prices surging due to supply disruptions and risks around key transit routes such as the Strait of Hormuz. Recent data shows oil prices have risen sharply, even exceeding $100 per barrel, as markets price in prolonged supply constraints and uncertainty. This rise in oil prices is directly influencing inflation expectations. Higher energy costs feed into transportation, production, and overall consumer expenses, creating upward pressure on inflation. If inflation remains elevated, interest rates are likely to stay higher for longer, which typically puts pressure on equities, especially smaller cap stocks that are more sensitive to borrowing costs and economic slowdowns. Market volatility has increased as a result. Major U.S. indices have experienced declines, with the Dow Jones and Nasdaq entering correction territory amid concerns over inflation and geopolitical instability. At the same time, sector performance has diverged, with energy-related assets benefiting, while most other sectors face downward pressure. Despite these risks, market behavior suggests a consolidation phase rather than a sharp collapse. Historical patterns indicate that geopolitical shocks often create short-term volatility but tend to have limited long-term impact on equities. Additionally, current data suggests that a significant amount of fear is already priced into the market, which can create conditions for stabilization or gradual recovery. Earnings season plays a critical role in this environment. As companies release financial results, investor focus typically shifts from macroeconomic concerns to individual company performance. This often leads to sideways market movement ahead of earnings, followed by more decisive trends depending on results and forward guidance. Oil price expectations remain a central variable. In scenarios where the conflict persists, oil prices could remain elevated, sustaining inflationary pressure and weighing on economic growth. However, over time, higher prices tend to incentivize increased production from other regions, which can help stabilize or reduce prices. Within this context, large-cap technology companies appear to offer relative value compared to the broader market. Companies like Microsoft, Meta, Amazon, and Nvidia, particularly when Nvidia trades below $180, are positioned as attractive opportunities due to their strong fundamentals and exposure to long-term growth trends, including artificial intelligence. On the other hand, certain large-cap companies are less attractive based on valuation metrics. Elevated price-to-earnings ratios in companies like Google, Apple, Tesla, and Walmart suggest limited upside relative to their growth expectations, making them less compelling in the current environment. Small-cap stocks remain under pressure due to their sensitivity to interest rates and economic conditions. In an environment where inflation persists and monetary policy remains restrictive, small-cap equities are more likely to experience continued downside or stagnation. While selective opportunities exist in companies tied to artificial intelligence infrastructure, such as Palantir, TeraWulf, and Western Digital, the broader small-cap segment faces structural challenges under current conditions. Overall, the market is navigating a complex mix of geopolitical risk, inflation dynamics, and earnings expectations. Oil prices and the duration of the conflict remain the primary drivers of short-term direction, while earnings performance will determine company-specific outcomes. Subscribe to the channel to stay updated with the latest developments and insights on the U.S. stock market.